Hey, good morning, everyone. Can you guys hear me? Can you see my screen? You can see my screen? And it's got the charts up? Just checking. Ah, okay, there we go. I had to refresh something. All right. I got this weird error that I never saw before, so just checking. You never know these days what the heck's going to happen. Oh, boy, oh, boy. Well, you ready for 4 years of this stuff, eh? Oh, man alive. Just when you think you've seen everything, folks. Just when you think you've seen everything. So let's take a look. The only thing that saves us as retail traders is process. And we have a process that works. We have a process that tells us when to trade, when not to trade, how to get into trades, how to get out of trades. Um, and that is really the most important thing through this whole experience. People who chase things around probably got destroyed yesterday, just like they got destroyed trying to buy the dip, like 6 sessions ago. It's a very difficult market environment, and I would really, um, I'm always one who says be careful, but I think right now just be process driven. We have a process, our process, and I'm going to go through it this morning. So the first thing that we do is we take a look at the larger picture. Now, if we look at this larger picture, we could see that all of the inventory. Now, you guys have been listening to me drone on about inventory for a long time now. All of the inventory is underneath 5,300. Okay? So we finally have, after all of these sessions, we finally have an opportunity for the dealers and the people who got long here to lighten the load. What does that mean? Okay, so say Raj and Jerry and Supra and myself and Donnie were all, wholesalers, and some of us have funds and things like that, and the wholesalers have to take in inventory. They've been buying and buying and selling and buying and buying, but they're net long, right? So when they're net long, they need to get rid of that inventory. And yesterday's move higher allowed them to lighten up on inventory, which means sell some and turn your product into cash. The product are ES contracts in this case. Okay? That's number one. Number two, Our market profile charts tell us exactly where the shorts are trapped. Now, the shorts are trapped here. So from, I'd say, 50.80 all the way to 52.80, that is a massive short position. That's like having a gap in the middle of the day. Okay? So, and tonight, you can see the shorts are trapped under 54.37, right? Our low is 54.41, right? How do you know where the shorts are trapped? I know Pupa's going to ask this question in 2 seconds. How do you know where the shorts are trapped? Because where you find support, here's a little secret that none of these nudniks will tell you. Where support is not a big bid from somebody who's trying to buy a whole bunch. That used to happen in the 80s and the 90s and all that stuff. In this day and age, that big bid at the bottom is a short seller or a group of short sellers. Okay? Especially in the overnight market, right? Overnight inventory tonight. Now, Howard, are you around, Howard? Where's Howard? If Howard is listening, overnight inventory is short. So he was asking me, how do I play the overnight when it opens? So when the overnight opened, right, we had this huge move up, right? What's going to happen is there's going to be, what's the agenda? The agenda is to short cover, right? Because there's a ton of people who are trapped. So overnight inventory is short, meaning we're going to let the market kind of fall a little bit underneath the previous day's close and see where the bid is. So how do you interpret it, Howard, is after a huge move higher, you look for a retracement, right? That retracement allows people to try and short cover. Tonight, that short cover is here, right? So now we know where things are. We know that there are single prints here, which is a massive short position. And we know this is where they talk about time frames. Now, there are people short from 2 days ago. I hope they covered. There are people short from yesterday. Yesterday we had a poor low. Remember we talk about poor lows? We'll go look at it later. There's a poor low. There was buying competition here, right? I wasn't even in front of the computer, and my girlfriend was, I don't know, she was trying to buy some stock. And she said, this thing's going crazy. And I went, what's going on? I went, oh, Jesus, not another sell-off. And I looked at the screen. I was like, uh-oh. I said he must have paused tariffs or he must have done something, right? So, and then I saw the spike. I saw this thing spiking. And I've seen this happen before. Now, people who've been in my room, Raj, remember when they did that Fed? There was a Fed day that was very much like this. It was very similar. The move was not as high. But if you go back in time, I think it was 2 years or 3 years ago, there was a profile like this and a huge spike up, and then it all came back down the next day. Now, I don't know if that's going to happen today because the macro has changed, right? Exactly. A poor low is when the profile doesn't taper off to nothing. There is what we call a double bottom. How you doing, Ed? Right? So there is massive instability in the financial markets, right? The financial markets usually have been a bastion of stability because they're usually run by old dudes and some ladies, who are very sort of conservative and staid. And there's always been price stability. Why do you need price stability? So you can finance companies and the price doesn't move every day by 20%, right? So you can value things. You have analysts who spend their lives locked in cubicles, strapped to a Bloomberg machine, who come up with financial models. All of that's kind of out the window right now. Okay? It's kind of like the Wild West, right? And the market really, really behaves like a penny stock. All right? And the market can be moved with tweets, with news. And basically, the powers that be have this thing on a string, okay, like a yo-yo. All right. Luckily, you're listening to someone who crawled through the sewers of the penny stock industry. And there's one thing I know is manipulation, volatility, and this kind of market. I know it very well because I used to create it. And we'd have a stock at $3 one day, 15 the next, down to 6 the next day, 20 the next. We would do stuff like that because, let's face it, my clients were high functioning sociopaths. So, I see that in these markets, and the best way to deal with this is to have a process. So we have our process. Tonight we know that the bid is in at 54.37. Okay? What does that mean? The bid is in, the buyers are here. The buyers are at 54.37 so far. Right? Overnight inventory is short. Okay? So if we can't get under 54.37 when London opens, most probably we'll get a move higher or at least sideways. Okay? If we get outside of the overnight high, for the love of God, be careful shorting. We do have some inventory up here, right? Where is it here? Let me just scroll up. Right? We have inventory up here, right? We have people who are trapped long. Most of them have been flushed out. But when we do get up here, there, you know, there should be some resistance as we get up into this area. Okay? There should be some inventory here. If there isn't, we could still get another big move higher, right? So process, process, process. Let's go look and see. So now we know inventory is short. We know where the bid is so far, right? If the thing starts to fall apart at around that 52.80 level, that's where the big short position is, right? 53.46 is and 53.42 are big levels for me to the downside. Let's see what happens. Now let's go mark off our stops. The overnight point of control. The overnight point of control is all the way down here. It was higher. We moved it lower. And what we need to do now is find a way to trade this. Well, that's what I'm saying, Poopa. There is inventory above. Those are trap buyers. Most probably, when you flush a market 300 points, 400 points lower, they're going to be gone. But there's going to be traces of inventory, right? If they're not there anymore, the market will rip through that like a hot knife through butter. And that's a great question because I have a story. To explain exactly how that happens. Oh, Sandy. Yes, we're on YouTube. Hang on, Sandy. Sorry. We're always on YouTube, Sandy. One sec. For these sessions. For the coaching, we're on Zoom. Sorry, brother. I apologize. Okay. So hang on, I'll put it in here. It's hang on, where are we? There you go. So when a market, this is a really good question, Pupa, right? When a market has like you don't think of it as beating a rug. We took the market and we beat out all of these people who were long. We just crushed them, right? We took all of these people and we held their head in the toilet and we forced them to sell all their positions. Hey, buenos dias, right? So when we get back up here, what is the likelihood that we're going to encounter resistance? I think there'll be a little bit of inventory. I don't think there's going to be much, right? When you flush a market really, really hard, right? I mean, we went from, let's just say 6,000, round number, 6,000 all the way to 48.67, 57. That's a massive move in a very short period of time. Once again, I use the term margin call robbery. Anybody who is trading on margin and futures as a margin product gets flushed out. Okay? Nobody buys futures for cash. Not that I know of, right? So, how do we trade this? Our old method. We go and find a balance, right? Very simple. We're looking for highs and lows. When you look below that low, you go right back to that high. Two-sided trade. Hey, Mike, what's going on? What time is it in Oregon? 11 o'clock at night or something? Yeah, I figured. And that's how we trade, right? We got a nice back and forth going. Our zone is 10 points today. It's tradable. The only problem is margin. It's still full margin at a lot of firms, right? And if you look at the ES order book, it's like 6 aside, 8 aside. It's not very, it's not a thick book. And you know what? I can take a screenshot of that. It won't let me take a screenshot of the order book. Okay, fine. Um, what's going on? Right? So when I say it's 6 aside, 8 aside, I mean there's 6 contracts bid and offered on each tick. The biggest bid and offer I see are 10, 11 contracts. That's a thin order book. So if somebody comes in and drops a 100 contract buy or sell order, it's going to move price quite a bit. Does that make sense? Right? It's like taking a big rock and throwing it into a small pool of water. Right? You take a big boulder and you drop it into the ocean, right? There's no effect. Right? You take a big rock and you drop it into a puddle, it displaces a lot of water. Do you guys understand the Can you guys visualize that? That's what we mean by a thin order book. Yes? No? Can you guys hear me? Why would anybody do that? Ed, when you need to get out of a position, you need to get out of a position, my friend, which leads me to another story. Okay, we're coming back. Let's see if for those who are actually trading this, right? Who do have 2 grand to trade a micro with, right? You're looking for a short under 57 and you're probably looking to cover right around here at 50. So if you're short 57, 56, your stop should be around 58, right? And you're going to find some bids right around here, right? They front ran right there, right? A thin order book can be seen through a candle chart. Yes. Big 1 minute candles. You know when you see those really big 1 minute candles, like here you see a 57 to a 66 candle? That is representative of a thin order book, right? Do I have a bias for today? Yes. Do not get punched in the face. That is my bias for today. Right? Try and make it through the day with all my fingers and my toes. Right? So, Ed, why would anybody sell a big chunk and screw up their dollar cost averaging? Because if I need to sell 500 contracts, Ed, say I'm on a margin desk and it's a forced sellout. Say that something happens and I need to get out of a position. I don't care about price. They just need to get out. So sometimes one of my clients would have a position on and they didn't pay for it or their wire was late and the compliance officer would say, hey, you got to get rid of this. And say they had 500,000 shares in their account and they said, you got to blow this out. And the stock's $6 a share. Okay? And they've got 500,000 shares and it's trading at 6. And I see a bid. If I see a bid at 450 for 350,000 shares, I'm going to hit it. And I'll just decimate every single bid on the way there to get there. I don't care. I'll hit it. Right? Yeah. Sell limit 0. That ought to do the trick. And oftentimes, after we promote a stock, say we took a stock from 30 cents to $8 and we sell, 50, 60 million shares, sometimes we have to take it back down to clean up the market. And that's exactly what they did just now. They cleaned up the market this month and they reset the cost basis. Now we're doing a look below and fail of 57.50. Remember I told you there'd be bids down here at 50? Well, guess what? There they are. Right? It's not like I know something magical, right? All I do is you got to be able to pay attention to the chart and not focus on other things, right? So we knew that if we were short 56, right? If we were short 56, we knew we had to cover somewhere here. Why? Because that's where the bids are. Look, bid, 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 bid. Couldn't get down to 47. Do you guys understand what I'm saying? That's practical information that you can use every day to make yourself some money, right? It's not an indicator. It's not some goofy theory. It's reality, right? I was talking to somebody yesterday and they said, your method, your style, and it's like, it's not my method or style. It's the reality of the business. Well, Sandy, you got to stop trading, Sandy. And we're going to have a call after this lesson. Okay? You got to stop trading so you can actually sit and watch things without being emotionally attached to the outcome. Right? That's the only way it happens for people. Because as soon as you take a trade, your IQ drops 100 points. And not just you, me too. Because you're emotionally attached to the outcome of the trade. So you lose all your objectivity. As soon as you put money on the line, your brain shuts off. So what you got to do is you got to train your brain, just like a boxer, right? Trains themselves to slip and duck without overthinking. If you step into a boxing ring, right, and you start overthinking, or if Ed, who's a policeman, goes through the door and he's thinking about all sorts of things and people are shooting at him, right? It's not going to end well, right? That's why policemen, they practice what? That instinct shooting, right? Look, shoot in the direction that you're looking at, like trying to punch a hole through something, right? That's why boxers practice, 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 right? So you can react. But you can't do that if you've got money on the line and you're trying to make money. You'll never, ever succeed doing that because you're emotionally attached to the outcome of the trade and you'll never be objective and ever, you'll never get your skills, right? Exactly. Being shot at does sharpen your instincts, right, Ed? Yeah, reaction shooting, right? And you guys go to the range, you guys run drills, you do all of that stuff over and over again, don't you, Ed? Right? To make sure that when the time comes that you react, right? You are trained to react. You must train yourself to react in trading. Otherwise, you're going to be stuck like a deer in the headlights and you're going to freeze, right? Or you're just going to, right? You've got to do that. You've got to put in that work, right? Trading is still a physical skill. You still have to enter the orders manually because we don't have that. Oh, there's a seller right here. See? You see the sellers right there? Top of the candle, that's where the sellers initiate. So if the sellers are under 68, if they see buyers, they'll raise price to 70. Exactly. People under stress follow their training. Thank you, Ed. And those with no training freeze. And it's the same thing in trading, right? You have to train yourself how to react. And it's not just so you trade faster. The most important thing is that you recognize when a trade is going wrong. How do you recognize when a trade is going wrong? You understand the business decision for that trade. For example, if I was short at 66 and I see that offer lifting 67, 68, I know I'm losing my seller, right? If I'm losing my 68 seller, why would I be short? Look at that. They're raising price. You don't want to go short when they're raising price. You want to go short when they're lowering price. See, everyone's trying to catch the front end of this move. They're all trying to catch this. What you want to do is you want to let them go up and then come back in and then short when they're hitting it. So you know the sellers are there. And exactly, now you know why it bounced from cost basis. Cost basis, we put it on sale down to cost basis. Attention Walmart shoppers for 20 minutes only on sale now, right? WD-40 is on sale, 2 for 1, only for the next 20 minutes. Right back up, right? It's a market, folks. Don't let anybody tell you otherwise, right? It's a market. There's no difference than from this market than going to a flea market, you know. And there's a guy selling fake Rolexes. There's a guy selling, what else do they sell at flea markets? I don't know. I haven't been to one in 30 years, maybe longer, you know. But in this particular stall at the market, we're selling ES contracts. See, in the behavior right here, you can see that there's a little price competition, but the seller's not aggressive. Let's make this bigger, right? The seller's not aggressive, and you can see that the offer, the red line is lifting above where it used to be, where it was selling. That's why I wouldn't be in a short right now. See how that offer is lifting? Now, if you were in a trade and you were shorting, right, you would just worry about the trade, right? Now the seller stepped in. Let's see where they stop selling. Right? And some places, if you see chop around a level like this, stay away from it because it's unpredictable order flow, especially on a night like tonight, right? On a night like tonight, the order flow is unpredictable, right? See? You go long, you get stopped out. You go short, you get stopped out. You go long, you get stopped out. Sound familiar? Right? It's happened to all of us. That's why you identify that as a no trade zone. Exactly. The middle of the zone, you stay out of that. Don't diddle in the middle. Right? Well, Ed's retired now, I think. This is Ed from Sedona, right? Good for you. Now London's opening. Let's see what London's got. What kind of business is coming in now, right? Let's see if we get some bids at 60.61 right here. You want the most practical information you can if you want to be a trader, right? Don't worry about all the fancy stuff. Just find the bid, find the offer, and have a method to take advantage of it. Have a method to know when to trade and when not to trade, right? So if you were long, for example, just by that seller at 72, are they there? Are they aggressive? Will they lift? Right? Because if that 72 seller sees buyers, they're going to lift. See, they're lifting? See, they're creeping it up, but there's some competition at 72, so back under 72. Right? Oh, exactly, Mike. Or the old, hey, Mike, how about the old, hey, can you hold on to this position for me over the weekend and stuff it in your inventory? I'll take it back first thing Monday morning. Yeah, that gag's so old it's got whiskers on it. Monday morning it's down 30%. See, so they're seeing buyers, so they're raising price. Mondays are bad. I remember one of my old clients got me with that. Hey, can you take this 70 grand? I got no place to put it. Take this position. I'll take it off you first thing Monday morning. Stocks at like 550. Monday morning, frickin' thing's 350 in pre-market. I'm like, yo, you got me, you rat bastard. Right. That's okay. I got them for $400,000 after. Oh yeah, well if you hey, if he doesn't pay for it, it was in my inventory, so the firm nailed me, right? Right? Remember, broker when you're a trader at a brokerage firm, and this sounds rude, brokerage firms are like pimps. They take 50% of the profits, but when you take a loss, you take 100% of the loss, and you have to pay it back. Exactly. Financial services, indeed. Looking for 76. Come on. Let's see if we can go tag that 76. There's 76. See, and this is that overnight inventory is short and it's adjusting higher, ladies and gentlemen. That's why if you know of overnight inventory short, you're looking for a move up. And that's exactly what we're getting because we had some short covering coming in from London and it couldn't get lower, right? So I know it's like really difficult to trade this week, but we told you pretty much not to. Those who did and made money, great. Those who did and lost money, we're sorry about that, but now you need to sit back and learn, right? So they front ran VWAP. The seller stepped in. See that space between VWAP and the top of that candle? Those are sell orders. The levels work. That's where they're hiding, Mike. Hell, if I had position at 68.72, I'd be front running VWAP. I'd be hitting every single bid over 76. Be like, hey JJ, can I show you what sold? I'd like to buy sold. Good morning, sold. Right? And then you'll start noticing things like market structure where the market comes down and you'll see the position is underneath 71, so it'll kind of pause, right? See how it pauses and then lifts. So you learn these things from watching. You can't learn these things from trading because you'll never notice them when you're actually in an active trade, right? You'll never notice this stuff unless you are objective, right? If you're trying to trade every single tick, every price, you're never going to notice the subtleties of the market that make a huge difference. And that's your edge. You know what your edge is? Your edge is that nobody pays attention. Nobody pays attention. And I started doing that early in my career. I remember once the market closed in Vancouver at 1, and for some reason I would sit and watch the after hours trading. And the same deal that those guys tagged me 70 grand on, right? They were trying to convince people that people were shorting it and they're going to break the short. So they were trying to convince people to buy the stock. And then one day I see like 300,000 shares or 200,000 shares go across the tape at like $5, right? 45 minutes after the close. I don't know what I was doing there. And I picked up the phone and I go, hey, somebody just moved a block. And one of the guys was backdooring the team. He was selling stock behind everybody's back, and I caught him. It's good, Moran. It's really good. Yeah, The Big Short's it's a good movie. Exactly, a wrong number. It's the little details. Sometimes you'll catch things, you know? Because everyone's like, oh, it's a short seller. It's a short seller pushing the price down. I'm like, no, it's one of you guys selling stock behind everybody's back. Ari, actually, it's really funny. The next day, This is hilarious. One of the guys on the deal team called the guy up and said, "There's a rifle pointed at you." They were watching him in the window across the building, and he just dropped to the floor. Oh, that was funny. Good times. All right, let's see if we can get down to 68. He was such a weasel. He deserved it too. See, now this is not tradable, right? This don't get sucked into this, right? These tight little candles, that's the wholesalers getting rid of the product from here and here, here, right? So don't get sucked into that. And this is what gets a lot of traders because they don't know when not to trade. Right here. That is that is a trap. This kind of, this kind of barcode pattern where it's just that, just don't fall for that. Do not fall for that. Uh, that's a great question. If we take out that 68, I want to see where the other bids are. I'm thinking maybe 62. But I can't tell just yet because I've only been really watching the market for about half an hour, 40 minutes. I need more time. I need more time in this market, Jonathan, to sort of figure out where things are. Right? It's a bit of a more complex puzzle these days. I think I took one trade yesterday. Right? Anybody see that interview that Tom Sosnoff did with Dylan Radigan yesterday? Over 85. Cheapers. Right? There's no stops until, oh God, the next stop is 5507. Be careful if you're short. I don't know where he is now, but it was quite interesting to hear Tom's interpretation about what's going on. I have a lot of respect for Tom Sosnoff. He's an amazing trader and actually creates product. He created an exchange. He created product. How much time do I spend watching the charts before entering a trade? Um, Sometimes hours. It depends, Slippy, on how smart I am that day, right? Like if I'm a little slow mentally, I'll spend more time watching. If I'm kind of on it, I'll take test trades using the micro, and if they work, then I can start trading. If I take two or three trades in a row and get stopped out using the micro, I stop trading and I'll spend another hour or two watching. It really depends on how mentally sharp I am. You know what I mean? I'm always kind of thinking, am I really seeing it? Right? What do I think of opening range balance? I have no idea how to use it, Sandy. Now I know that guys like Pax and stuff like that use it, but I have no idea how to use it to make money. And I would suggest for you to stay away from it. Knowing, you know, how you trade, I would strongly suggest that you stay away from it. right? You want to keep it as simple as possible and take as fewer trades as you can, Sandy, right now, right? If you're having any kind of like issues in trading, and we all do from time to time when we're starting and then even after we're trading for a while. Now we're coming back under 76, so we caught some sellers at 85, 84, or 80, right? Anytime that you encounter any kind of difficulty trading, go back to the basics. Go back to that one trade that pays, right? Go back to one simple way of doing business, right? Where you understand the business reason why you're taking the trade. Do the business conditions allow you to take the trade successfully? Are you operating at a level of skill that you can take the trade, right? Just simple things like that, and stick to that. Of course, because you haven't trained yourself, Sandy. That's all it is. It's just training. And we're going to talk right after this session. We're going to do our one-on-one, right? So we'll go over that. So does mine. When I first started trading, right, it was right after my heart attack. And it's funny because I would take one mini and my heart rate would go up. It'd be like thump, 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 thump. And I was like, oh, it's because I don't know what I'm doing. Okay. Right? That's all it is. Right. Long-term capital management. I remember that day. They went from being the powerhouse, they were like the citadel of Wall Street. Crossed the spread for 45 minutes and lost $400 million. Yeesh. And back down. Hey, let's look at that 68. It breaks. Let's see. Maybe we come down here to the 62s. I still remember long-term capital management. That was 97 or 98. They sent us home. I remember they shut the market down. They closed the New York Stock Exchange. And we're like, what do we do? They're like, go to the bar. Do we come back tomorrow? They're like, come back. Maybe you have a job, maybe you don't. uh, yeah, we've been through some moves in this market. LTCM, 9/11, financial crisis, flash crash. I still remember when Bear Stearns was the clearing firm on the street. Look for that stop at 62 and a half to get hit. Just down here. I firmly believe if Ace Greenberg was running Bear Stearns instead of Jimmy Kane, it'd still be around. Okay, we took that stop. Exactly, Mike. Now I want to see if the bottom of my zone at 57 works. There is a standard deviation there that should help with a little bit of support. Oh, how's the coin of bitterness this morning? 82. Renaissance Capital lost money in the first 3 weeks of April. I mean, when does Renaissance Capital lose money? Like, seriously. So overnight inventory is still short. So we know where the bid is. Oh, we know where the bid is in the overnight. It's down here at 41.42. Let's go look at that low yesterday. Jeez. I'm still scrolling. I'm still scrolling. I'm still scrolling. Right? Look at the low yesterday. That is a poor low. The low in C and the low in D. That was buying competition right there. Right? Now, was that a sign that we were going to get a 400-point rally? I don't know about that. All I know is don't ever short a poor low. Right? One of the market profile people, and a lot of them say short a poor low because it's going to correct. I strongly advise not doing that. Right? I strongly advise against shorting a poor low. Wait till it breaks and accepts underneath. Do not preemptively short a poor low, hoping it's going to correct. You are going to get destroyed. Inventory short means that the price, right, of the session, of the overnight session. Here, let me just. So here, I'll show you guys. The close is here, and all of the trading in the overnight session is underneath the close. So inventory is short. That's why you get these moves higher. If inventory is long, it would mean that the trading is above yesterday's close and you would be looking for a lower move. Okay? It's short compared to the close. It's a little confusing, isn't it? But it works. Now, what happens if inventory is short and you don't get a move higher? It means that there's sellers. Right? We're talking the inventory of the market, not individual players. We don't care about them. Right? The inventory of the session compared to the close of the previous session. Yeah, really. How could you care about who's short, who's long? You can't retain all that information, Mike. No, shit, no. So sorry. The statistical average of everyone's position, no, that's way too much, brother. Now, you might be able to code that. I have no clue. You got to keep it real simple. Right? This is why I use hillbilly math, and this is why we used just a 1 minute candle chart, right? So right now we don't have to sell under 57. They're going to raise price, right? And there's going to be sellers here and sellers here and sellers here. Very simple, right? Hey John, how you doing? You back in Hawaii? Exactly. Simplicity is the key. Simplicity and process, right? Religiously stick to your process because it'll help you from doing dumbass things. That's a nice choice. Hawaii or Spain? Beautiful. So you can see that there's a seller here in the 60s, right? You can see the sellers right there, right? Don't trade that, right? See? Now, if you're short under 57, you're looking for that 50 again, and if that breaks, you're looking for 47 half. If we accept back over 57, be careful shorting. Does that make sense? Right? And there's a stop here, which explains that low. Of course, there's going to be some persistent sellers, Jonathan. There's still, even after yesterday's rally, right? There is going to be everything's kind of upside down. People are still figuring out what happened. To clean out inventory, Ari, we have to get above the close. In my right, because if inventory is short, to correct it, we have to get above the close and stay above the close. I'm looking for lower because the people who are buying right now are short sellers trying to cover, right? And they will try and cover. See, there's 47, right? As soon as we took that 50 stop, boom. Now look for the overnight low to get tested. This is great because we're going to see what's lurking down here, right? What's down here? What kind of bids are here? Or is that it, right? Let's see. As soon as that offer starts lifting, they're going to start covering, Mike, right? As soon as that offer starts lifting, right, that means that the sellers have seen buyers and they're lifting the price, right? I'm talking about the short cover from yesterday, John. That's where the current cover is in. Let's see what happens. Now, I do not like to get involved. Yeah, you missed a lot. Uh, right. Look, look, the offer's lifting above 47.5. See? There's the seller. So as soon as an offer starts to lift, what do? You look to see where the seller is going to step in, right? You start looking to see where is the seller going to step in. They were here, right? There they are at 50. 50 was support, right? See how they stepped in? Now back under 47, right? Let the size traders work this out. Don't try and jump in this and be a hero. You have no idea what's here. You have no idea what's here, and you have no idea what's here. Let the large sellers show you. Okay? This is where it'll get volatile and frisky. Don't get sucked into trying to find the low. Let the people with billions of dollars do it. See? Yeah, John, before you start trading again, we'll do a one-on-one, okay? You've been away for a while, and the entire world has changed a few times. Okay, folks. Remember, thin order book. Be careful out there. Be smart. Stick to your process. Does the trade make sense? Does the trade make business sense? If the trade does not make business sense, do not take the trade. Right? Right? Yeah. You don't need to. It's like when you go. It's like Ed when you go to these fancy dinners with billionaires. You don't reach for the check. Get alligator arms. Right? JJ, what do I do? I was long yesterday in a lot of stocks, but put limit orders in since I wanted to sell the rip and did miss the news since I was walking, but now my portfolio is empty and I feel FOMO. I am restraining myself from trading emotionally. Feel right. Yeah, you know what, Tobias? You are always gonna you are always gonna miss trades, and I really applaud you for not trading because you're not feeling right. There's gonna be lots of opportunity. Just relax, okay? Just relax, right? Just relax and wait for your opportunity when the business suits you. Don't just chase this thing up and down, right? Right? The business has actually been around for hundreds of years. You're going to be fine. And I applaud you for sitting out if you don't feel right. That's really smart. Really smart. All right, folks, I will see you at 9 a.m. Eastern Time. Stick to your process. And let's see what kind of circus we get later on. This is the Forrest Gump market. It's really a Forrest Gump market. You never know what you're going to get. Thanks, everyone. See you in a few hours. Bye for now. Oh, yeah. And if you want to learn how to trade with some common sense, please come visit us at Microefutures. We always have that 7-day free trial going. Come into the Discord room, bug me, we'll chat. Thanks, everyone. Bye for now.